Investing can feel super complicated, right? Like it's this exclusive club just for experts. But what if I told you that the best, most powerful strategy is actually incredibly simple? Today, we're going to break it all down. This is your step-by-step plan to start building wealth, even if you're starting from absolute zero. So let me tell you a story. Picture an investor starting out way back in 1985. They're watching their money grow, things are looking good, and then, bam, Black Monday hits in '87. We're talking the biggest single-day market crash in history. Everyone's panicking, friends are screaming, sell, get out now. But they just held on. And then came the dot-com bubble bursting, the massive 2008 financial crisis, and of course, the global pandemic in 2020. Through every single one of those terrifying crashes, with every headline yelling about disaster, they did one thing, absolutely nothing. They just stayed in the game. So after all that drama, what was the payoff for this nerves of steel approach? Well, after riding out every single one of those financial storms, their average annual return over that entire 40-year period was an incredible 11.23%. That right there is the reward for patience. Okay, but what does that percentage actually mean in real money? Let's say our investor just put in a simple $250 every single month since 1985. That small, consistent habit would have turned into, get this, over $1.8 million. That's not magic, it's just consistency. And that story, right there, perfectly captures the main lesson for today. Winning at investing isn't about some genius move to time the market perfectly. It's all about time in the market. It's about getting started and just sticking with it. But hold on. Before you dive in, there is one non-negotiable, must-do first step: your financial safety net. I'm talking about having 3 to 5 months of your living expenses saved up in a bank account you can get to easily. Think of it like a parachute. It's the one thing that makes sure you're never forced to sell your investments at the worst possible time just because your car broke down. All right, with that safety net in place, let's get to the fun part, the actual steps. And honestly, the best part is that this has never, ever been easier to do. You don't need some fancy stockbroker in a suit. All you need is your phone. Seriously, getting started really just boils down to these two little things. First, you open the right kind of account. Second, you put some money into it. That's it. That's literally the entire barrier to entry. So what do I mean by the right account? Well, it's a tax-advantaged one. Basically, it's a special account where your money gets to grow without the government taking a huge slice in taxes. If you're in the UK, a popular one is the Stocks and Shares ISA. If you're in the US, you've probably heard of the Roth IRA. The details are a little different, but the goal is exactly the same. Let your money grow way more efficiently. Okay, so your account is open and you've put some cash in it. Now for the million-dollar question, what do you actually buy? Well, the strategy is brilliantly simple. Instead of trying to find that one magic stock, we're just going to invest in pretty much all of them at once. I know, that sounds a little crazy, right? Maybe even impossible. How can one person, with one click, possibly invest in hundreds of the biggest and best companies in the world? The answer is a beautiful invention called an index fund. It's basically a big basket that's designed to automatically hold all the stocks from a major market index, like the S&P 500 in the States. So when you buy just one share of this fund, you instantly own a tiny piece of Apple, a tiny piece of Google, a tiny piece of Amazon. You get the idea. Hundreds of companies in one go. Here's a super simple way to think about it. The S&P 500 is like the top 500 music chart. The companies are the songs. The ones that are doing amazingly well, the smash hits, they climb to the top. The ones that just aren't popular anymore, they fall off the list. An index fund just tracks the whole chart for you, so you're always invested in the current hits without doing any work at all. And this is the real magic here. It's called diversification. Let's say one of those companies has a terrible year and totally bombs. Does it sink your investment? Nope. It barely makes a dent because its bad performance is balanced out by the hundreds of other companies you own. You're not putting all your hopes on one hit song. So we have the account, we have the strategy. Now let's make it completely effortless. The secret weapon here is automation. We're going to create a true set it and forget it system for building your wealth. Check out this cool little experiment someone ran. They decided to invest just £5, about what you'd pay for a fancy coffee, into an S&P 500 index fund, and they set it up to happen automatically every single day. And the result? After just 3 months of this simple automated coffee money plan, the portfolio was already up over 5%. Now, that's not going to change your life overnight. But it proves the point. Even tiny, consistent amounts start to grow and compound right away. And hey, here's a quick pro tip to make this even more powerful. When you're picking your index fund, look for the word accumulation or the letters ACC. All that means is that any profits paid out by the companies, called dividends, are automatically used to buy you more shares. It's like a growth booster that you don't even have to think about. Now, let's look at what that consistency can do over the long haul, because this is where it gets mind-blowing. If you invested just £250 a month for 31 years, you'd have put in about £94,000 of your own money. But thanks to the power of compounding, your portfolio could be worth over £1.1 million. Your money starts working way, way harder than you do. So you know all the steps now. It's pretty straightforward, but I know there's usually one last thing that stops people in their tracks, and that's fear. The fear of risk, of market crashes, of losing everything. So let's just tackle that head on. We really have to flip our whole idea of risk. Yeah, investing has its ups and downs in the short term, for sure. But the far bigger risk, the one that's a 100% guarantee over your lifetime, is losing your buying power, because your cash just sits there getting eaten away by inflation. That's why this quote is so true. The single biggest risk you can take is not starting at all. And this is why starting early is everything. Just look at the insane difference in potential wealth between someone who starts at 25 and someone who waits just 10 years to start at 35. That lost decade of compounding growth is a penalty you can never, ever get back. Procrastination is by far the most expensive mistake you can possibly make. So how do you survive those storms that are definitely going to come? You do exactly what that investor from our story did at the very beginning. You build a solid strategy based on a diversified basket of index funds, and you just keep investing consistently through thick and thin. You let time do all the heavy lifting for you. So there you have it. We've laid out the entire blueprint: getting the right account, picking a simple but powerful strategy, and putting it on autopilot. The final question is really just for you. Now that you know exactly how to do it, what's holding you back?